Good day, crypto trader. Why that $30,000 marker might take some time for Bitcoin bulls to get there. Bitcoin, BTC, price is set to tie up again with its winning streak that got disrupted last week in a minor loss during its weekly close. Meanwhile, bulls have printed their mark on the price action by making a new high for the summer rally, although a fade, for now, is taking back a bit of those gains. Expect to see the summer rally slowing down as the seasonality kicks in, with the first part of September often being a drag on performances. BTC price onwards and upwards for now. Bitcoin price still has a few elements in its corner backing the rally as tail risks are slowly but surely starting to re-emerge from the scene. This means that the rally will not be that big anymore, and although $30,000 could still be reached, it will rather be in a slow grind, although the time horizon is getting narrower towards September. The biggest catalyst comes from the drop in inflation in the US, which means that households have started to have more disposable income and more money to spend on investing in cryptocurrencies. BTC price first will need to face $26,000, which can be reached as of next week as long as BTC price can print a positive number for this week's close. Investors and traders will certainly jump on this element on Monday as the relative strength index is still skewed to the lower end of its spectrum and thus has a very large portion to rally before being overbought. This should see an accelerated inflow of cash once $26,000 get broken to the upside, and by the beginning of September, BTC price would be set to either test or break $28,695 or already close above it before hitting that final $30,000 level. Risk to the downside comes with several traders returning after their summer vacation and picking up where they left off, as tail risks start to inflate again, and dollar strength could choke the current rally in BTC. Watch for signs like a break below the 55-day simple moving average and a test near $19,036 due to a break below $20,000, which means that the summer rally is all but lost. Why other cryptocurrencies should follow the lead of Ethereum. Ethereum, ETH, price should be an example and motivation for other cryptocurrencies to follow its lead. Not only is ETH price printing at almost 10% gains for this week, but it is also in reach of a very big psychological level that could make or break the next steps. With several other indicators in favor of a more bullish reaction, expect to see ETH price soon hitting the monthly R2 resistance level at $2,278 and making 30% overall since the end of last week. ETH price is pumped with no room to stop just yet. Ethereum price is on a tear after the very difficult trading week it had last week, where ETH price was nearly set to end its winning streak of 5 consecutive gains. This week will be number 6 as ETH price is holding a solid profit. EHT price saw its gains accelerating on the back of euphoria in global markets that the inflation numbers in the US are finally starting to slow down. ETH price is in a good position to jump above $1,928, a key level just below the monthly R1 and crucial to be reclaimed by bulls. From there, a perfect entry is offered to go for that big $2,000 psychological level and right in the middle as an anchor point for the monthly R2 and the 200-day simple moving average at $2,278. Should bulls be able to perform this playbook trade by the end of August, roughly 30% gains are there to write down on your account. Risk to the downside comes with a firm rejection against $1,928, which could see a big fade and pull back towards $1,688. With this drop back, bulls that bought in along the way will start to unload and unwillingly start to give bears more strength to dip toward $1,404. That is roughly a 20% loss, as that pivotal level, together with the 55-day SMA, should be enough to catch the price action. Why Solana price action is going nowhere. Solana's SOL price, from a first glance at the sheet, looks bullish and set forth to continue its rally and winning streak. However, a closer look under the hood reveals that on a weekly chart, price action is going nowhere and could soon collapse once a tail risk gets inflated again. With the end of the summer at hand, the volume starts to pick up again, and this rally could as easily start to fade out as it did in July. Sol price stands to drop 55%. Solana is trying to hold onto its weekly gains and continue its rally from July after last week's hike, although the 55-day simple moving average supported price action. Looking a bit closer to the bodies of the candles, where they open and close, it reveals that price action Sol is not going anywhere since the last of July. Price action has been opening and closing around the same levels. Sure, there have been swings to the upside and the downside, but the bodies show no sign of actual higher or lower movement within 3 weeks. Although looking bullish, Sol price could give a false sense of security and be caught by a bearish surprise. Keep a close eye on that 55-day SMA, as that is key from now on. Once that level gives, expect to see first the monthly S1 supporting around $33.63 before turning into a falling knife towards $19 and standing to lose 55%. An upside surprise would come from some more positive catalysts next week, with a few economic data points that could revamp the drop in US inflation and continue to confirm that households are starting to have more disposable income. A quick lift in price action would happen towards $50, just above the monthly R1 for next week, and then by the end of August, $61.44 should be tested or even broken to the upside. Why Cardano weekly close could spell trouble to come. Cardano, ADA, price looks heavy and could drop like a stone next week as a few indicators signal warning lights. To make matters worse, the global sentiment is shifting back towards the same rhetoric it had at the beginning of the summer. The summer rally looks to end with several elements and tail risks coming back from a break. ADA price could devalue by 80% in a worst-case scenario. Cardano price sees traders slowly but surely coming back to the office and picking up where they left off when they went into summer recess. Slowly but surely, more bearish effects are coming into play, and the summer rally looks heavy. ADA price is thus at risk of a collapse, as it could set back its price action to square one for 2022 or even at new lows. ADA price, first of all, has been underpinned these past 2 weeks at $0.485, right below the monthly pivot held for a second week in a row for August. Thus far, the good news begins when the bad news begins, as no real bullish signals can be perceived from the weekly chart. Bulls were unable to make a convincing new high for August, while for 2 months, July still holds the record as the small trading range between highs and lows points to a breakout soon, which could fall in favor of the bears and see a drop towards $0.415 in a first phase, followed by a falling knife towards $0.075. To the upside, a breakout towards $0.715 is still possible, although the 200-day simple moving average and the monthly R3 are very bearish elements that will put a cap or limitation to further moves upwards. Bulls trading the upside must then keep this in the back of their minds, that upside potential is limited, although the relative strength index suggests otherwise. The biggest caveat is the dollar strength that could come back biting like a snake and scare away the bulls. Ripple price sees bulls getting squashed against lower support. Ripple, XRP, price sees bulls not enjoying their reclaiming of the 36 cents hurdle for long. With pressures mounting, more bearish signals are emerging, firstly pointing to the end of the summer rally and secondly possibly seeing a breakout soon that could fall in favor of the bears. With these elements, XRP price stands to lose 52% and erase the whole incurred gains from this summer. XRP is set to fall back at entry before the summer. Ripple price has been struggling since last week as it had to cut short its winning streak of consecutive weekly gains. With only 4 on the docket, a new one would be more than welcome to keep trust in the cryptocurrency. However, the high of this week coming in lower than last week and, in turn, that low coming in lower than the one from the last week of July points to a severe squeeze. XRP price could be at risk of losing interest from bulls. For example, Ethereum price action has a much clearer and supported rally to trade on. XPR price will probably see bulls being pushed against and below the 55-day simple moving average next week and the pivotal support at 36 cents. Certainly, should the dollar strength return from its summer recess, expect to see even a falling knife towards $0.1730 as the low of 2022 will be tested as thin liquidity in the summer months magnifies certain moves. To the upside comes a possible bounce off 36 cents and the 55-day SMA just below, underpinning price action. Within its area, XRP price could rally towards 50 cents and hit that level for the first time since May, making it a perfect swing trade. A 40% gain is not too bad for a cryptocurrency lagging a bit on its peers and has some catching up. Dogecoin goes forth without its backer and sets sail for a 50% uprise. Dogecoin, Doge, price has had a rough patch recovering from the crypto winter and the ear-deafening silence of its backer Elon Musk. Since Musk has not mentioned Dogecoin for months now, it is good to assume that the relationship between the two has ended, the breakout has been processed, and now it is time to move on. Traders in Dogecoin have done so and have provided a very strong bullish signal to the markets as price action gets underpinned and is skewed in only one way, up. Doge price set to be pumped up by 50%. Dogecoin price has had an enjoyable summer thus far. Clawing out of the well that the crypto winter had created on the back of that big inflation wave in the first few months of the year in relation to the Ukraine situation. A turnaround looks to be underway as Doge price is set to print a fourth consecutive week of gains. Doge price sees its price action is underpinned by the 55-day simple moving average, SMA, that is being used as a handle for the second time in 2 weeks. With the monthly pivots of August that close to each other, this element technically points to a squeeze, and a breakout is due to unfold. Seeing that underpinned price action at $0.068, price action could quickly climb to 10 cents and return a steep 50% earnings, backed by the relative strength index that has more than plenty of room before being overbought. Risk to the downside could be happening on the back of a mere technical break of the 55-day SMA where bears would try and run price action down to 4 cents. That is a 38% decline from where price action is currently trading this week. Should that level break, another can of negative returns gets opened with $0.007 as rock bottom. Why Shiba Inu is still set to pop 30% in August. Shiba Inu, SHIB, price is still set to rally quite sharply towards $0.001708, a very tactical level at the top of the R3 resistance level for this month and perfect as the completion of a swing trade since mid-June. Several technical elements thus provide tailwinds for SHIB price action in which it can rally. Although a pullback might be possible, seeing some dollar strength that comes back, keeping it at the end of this week's trading, expect to see price action well supported by the 55-day simple moving average. SHIB price set to swing higher. Shiba Inu price is enjoying the summer and moving positively in a thin liquidity market with traders slowly but surely coming back from summer recess. SHIB price tying up again with gains and looks even set to close out August with a gain after July had already printed solid numbers. On the horizon, a few elements to be aware of as the dollar strength persisted and did not see any follow-through of its weakness this week, and some tail risks are getting inflated again as traders pick up from where they left off. SHIB price first needs to break the double top around $0.00001276 with preferably a weekly close above. Once that is settled, it is a straight line towards $0.00001708, with in between all three, the monthly resistances are in the way. As those are so close to one another, they can be ignored as they rather confirm the breakout than try to use them as entry levels seeing they are so close to one another. The risk to the downside is plain and simple, another rejection against that double top at $0.00001276, which could trigger quite the fade to the downside. Bulls would get pushed against the monthly pivot and the 55-day SMA, mounting pressure on it. Should that level give way, a quick paring back of gains would happen to $0.00000507 and coincide with 55% of losses.